We've now reached the fifth and final step in lease accounting for lessees under ASC 842, which is to perform all subsequent measurements and adjustments after the lease commences. This step can include several different scenarios. First, we have our periodic accounting, which is the routine accounting that happens each period after commencement and as we make payments on the lease. Just as we record interest on a loan, reduce the loan liability as we pay it down, and depreciate the related asset, we'll have similar items to address in lease accounting. The difference is that the specifics vary depending on whether the lease is classified as a finance lease or an operating lease. And just to get you thinking, operating leases produce a single straight-line lease expense rather than separate interest and amortization components, but we'll walk through all of that in detail shortly. Separate from the day-to-day lease accounting, we also need to handle remeasurements that may occur during the lease term. For example, we may have originally concluded at lease commencement that we were not reasonably certain to exercise a renewal option, but business circumstances may change and we decide to exercise it. Or maybe our assessment of the amount we'll pay under a residual value guarantee changes. We'll look at all of this in detail as we move forward, but these would trigger remeasurements of the lease. Third, we have to consider lease modifications. These are situations in which the contract itself changes. Examples include adding an additional asset to the lease, changing the contractual term, or updating the payments. Lease modifications require a more significant accounting response than remeasurements, and ASC 842 provides a specific framework we need to apply. In some cases, the modification results in a change to the existing lease, and in others, it results in a separate new lease altogether. Finally, we also need to consider impairment of leases and the related right-of-use asset. Impairment can occur just like it can for any long-term asset on the balance sheet, so it's something we need to evaluate within the context of ASC 842. So as we go forward, we'll first focus on the day-to-day lease accounting for both finance and operating leases. This accounting applies to every lease and continues throughout the entire lease term. The other three items I mentioned are event-driven adjustments, and we'll cover those later in the series once we've worked through several examples and built a strong foundation for the ongoing accounting. It'll be much easier to evaluate those items once we fully understand the recurring accounting first. So in the next episode, we'll begin looking at the periodic subsequent accounting for leases. We'll begin with finance leases and then move on to operating leases.